Hello everyone. Today we are going to study about the activity-based costing in a strategic cost management. So let us begin with the meaning of activity-based costing. So generally, an activity-based costing is a costing method which helps in identifying the organization and assigns what cost occurs for each activity in the production and service level. So, according to the actual consumption by each product and each department where the production process occurs. Therefore, this model assigns more indirect cost into direct cost, and it also helps in comparing to the conventional costing as it seeks to improve the quality of the calculation by using the amount of activity that is involved in making an item as a basis for absorbing the overheads. So it helps in keep a close connection between the activity that drives the cost itself. It is an accounting methodology. It helps in assigning the cost to activities rather than products or services. And it is also a systematic cost and effective method of assigning the cost of activities of products, commerce, services, customers, or any cost objectives. So let us know the objectives of activity-based costing. The first one is it helps in accurate product costing. So it will help the management to compare the profit of the various customer products line which are in the company, and it also helps to decide the strategy which should be effectively followed in the company. This method provides a more accurate and detailed undersection of the cost associated with each product or services. It helps in enabling in better decision making and also the cost control in the organization. The next one is determining the cost drivers. A cost signifies the factors and events that determine the cause of the actual activities which are occurring in the organization. So these cost drivers they create a link and they can link a pool of cost in the activities. So these cost drivers are the main factors which influence the cost of an activity in the business. They can be volume based, such as number of units produced in during the batch time. The third one is trace of overhead cost. ABC attempts to segregate the allocable and non-allocable overheads. The cost and it also helps in segregating the cost on the basis of levels of operations which are occurring at a time. It breaks down overhead cost between the production related activities. The ABC system it helps to assign cost to each activities that goes into the production such as the bankers etc. The next one is calculating activity cost. The ABC also facilitates in organizing and reorganizing and also the redefining of allocations of cost to activities, which ultimately enhances the profitability. And the ABC needs a detailed analysis for this to identify the highest cost activities, and it also helps in taking the proper actions to reduce the cost. So, identifying is the non essential activities involved in the production of goods and services activities based costing, but it is based on the belief that in the production process, there are various activities which gives rise to the costs. The identification of cost reduction opportunities. In ABC, identification of cost reduction opportunities are by understanding the true cost of activities and factors that drive them businesses which can identify the areas. This ABC helps in revision of standard performance and the aids in identification of forthcoming profitable opportunities. These are those opportunities for cost reduction and to identify the opportunities for the improvement and reduction of cost. The cost of specific surveys as the management focuses on cost reduction, etc. The next one is to improve the product costing. As it says, it helps to identify non-value adding activities in the production process which might be a suitable focus for attention or elimination. And it has been accepted as a very useful for product posting your production overheads that are high in relation to where it was came or where there is diversity in the product. To understand the product and customer cost, ABC helps in an attempt to ascertain more accurate product cost by redesigning the allocative system of support overheads. It is like an inspection dispatch on the production area. A cost pool is a group of individuals that cost associated with an active poster you can create can boost by identifying the activities that goes into creating a product to understand the product and customer cost. It helps in gaining a better understanding of and to understand the products and the cost of customers which will be provided by the company itself, and it will depend on the production performance. The ABC main aim is to identify the activities which result in the accuracy of cost and focus on activities performed on a particular product during its production time. The main aim is to reduce the cost so that in the market the selling price of our organization can be lesser than the other competitive organization which are already there in the market. The last one is identifying the activities. It is an observant approach because it uses activities as basis for distribution of overheads. It aids of identifying as many costs as possible to be. Identifying it is the first stage, which is to identify the functional areas of major activities. It involves in the production process better understanding of business process, and most importantly, it provides a very valuable insight into the organization's business process, which helps in activities identifying the consumes of cost and production. Now, moving to the methodologies. Here, mainly we see three types of different methodologies. The first one is fixed cost. In very general language, a fixed cost is indirect cost or overhead cost that occurs in the production process. And these are the business expenses that are dependent on the level of goods are produced by the business. They can tend to be recurring, or the services which are tend to be recurring. It can be an interest or rent being paid per month or per year, and these costs also tend to be the capital cost. In contrast to variable costs, which are volume related and unknown at the beginning of accounting year, these are the best costs have an effective on the nature of certain variable cost. Variable cost. Now moving to the variable cost, these are the costs that changes as the quantity of goods or services a business produces changes in an effective manner. It is capable of the sum of original cost for all the units produced. They can also be considered for normal cost. Fixed cost and variable cost are most helpful for making up the two components of total cost. Direct cost or cost that can easily associated with a particular cost of the object. However, not all variable costs are direct cost. For example, variable cost, manufacturing overheads cost, or variable costs that are in direct cost and direct cost. Cost, sometimes called unit level cost, as they vary with the number of the units produced. So, a fixed cost is something which is fixed for a period, like paying a monthly rent and interest, paying to the bank, etc. But a variable cost, the cost which changes due to the fluctuations, it is called as a variable cost, which can vary at any time, such as petrol cost, petroleum cost, gold, jewelry cost, asset valuation, etc. And the next one and the last one in this ABC is overheads. In the business, Overheads are overhead expenses generally refer to an ongoing expenses of operating a business. The overheads are the expenditure which cannot be conveniently traced to or identified with any particular revenue unit. Unlike operating expenses, such as the raw materials and the labors, this overhead cannot be immediately associated with the products or services which are being offered. So, they do not directly generate the profits, but it is a part of generation of profit as overheads play the various role in the production department and in calculation of the original cost. However, the overheads are still a vital to business operations as they provide critical support for the business to carry out the profit medicine activities. As I said, these overheads don't directly affect the business in generating the profit, but they play a very vital role as they help to identify the actual cost occurred in the production. So, overheads are considered as the indirect costs which occur in the production process. These are the often related to accounting concepts such as fixed cost or indirect cost. The overhead expenses are all costs on the income statement except for direct labor, direct material, and direct expenses. The overheads expenses include accounting fee, advertising, insurance, interest, legal fees, labor, burden, rent, repairs, supplies, taxes, telephone bills, travels, expenditures, and utility as well. So this was all about the overheads, which affects the production process to identify the actual cost occurred on a product in a unit basis. Either it can be in a bunch or a unit, and it also helps the company to understand what will be the break even point and what will be the profit generation margin. Thank you so much for your support.